Welcome to the Nedgroup Investments Excess Accelerated Fund of Funds Quarter 3 Fund Commentary. The Excess Accelerated Fund of Fund sits in the South African multi-asset flexible category and has a return objective of inflation plus 6.5% over a rolling 7-year time horizon. From a strategic asset allocation perspective, 90% is set as our maximum equity exposure. If we look at the fund's performance over the last quarter, we see that by far it was our global equity holdings that contributed the most to the portfolio. This was on the back of two factors. First of all, rising global equity markets, and second of all, a strong deterioration or weakening of the rand, which resulted in our offshore holdings contributing nicely. Other areas that contributed were our holdings or exposure to global flexible funds for a similar reason, as well as global property that all added positively due to rand weakness. On the domestic side, the portfolio took strain in both the domestic property and domestic equity spaces, particularly the small and mid-cap sector. South Africa economy fell for a second consecutive quarter, creating a technical recession in the country, and this brought negative sentiment onto the local market. Looking at the fund's performance over a 7-year and 5-year annualized return period, you will see that the fund has performed strongly to peer group, outperforming peers by approximately 2% on both a 5-year and 7-year figure. The 7-year annualized return of the fund is 11.6% versus the peer group average of 9.4%. Looking at the fund's calendar year performance, you will notice that we have managed to outperform the peer group every calendar year going back to 2013. This shows the consistency in terms of the fund's performance over an extended time horizon. The fund is currently ranked in the second quartile relative to peer groups. Looking at the risk measures of the fund since inception, we see some interesting factors coming out. First of all, the volatility of the fund sits at 9.4%, which is well below the South African equity market volatility of 14.6%. We also see that the fund's maximum drawdown is minus 24.1% relative to the South African equity market's minus 40.4%. This shows one of the key areas that we look at when doing fund selection, and that is that we focus on managers who preserve capital well in falling markets. We also see that 66% of the monthly returns have been positive, and that over a rolling 7-year time horizon, the fund has 100% of the time outperformed the peer group. This can be seen in the graph on the bottom left-hand side, which shows that over a rolling 7-year period, which is the targeted time horizon of this fund, we have outperformed the peer groups at every time horizon. On the bottom right-hand side, on the histogram, you will see that this plots the quarterly return distributions of the fund since inception, and the vast majority of returns of the fund fall somewhere between negative 3% and positive 6% on a rolling quarterly basis. It is clear also to see that the fund has a very positive skewness to returns of somewhere between 1 and 4% over most quarterly time periods. The following slide sets out the performance across the fund for the various classes that are available. One is able to identify which class you are invested in and then be able to read the performance of the fund over the various time periods. Looking at asset allocation changes of the fund over the period, you will notice that the main change over the last quarter has been our reduction in offshore holdings and where we have reallocated that cash domestically. You will see that our global equity holdings have decreased from 21.6% to 18.1%, as well as our global cash and global property exposures. This was brought back to South Africa when the rand weakened considerably to around about 15.3 to the dollar. You will notice that that money was reallocated largely to the property and cash space within the domestic markets, which we feel offers much better value at this point in time. Looking at our asset allocation, we have currently approximately 26.5% of the fund invested directly offshore, with a further 23.8% in rand hedge stocks. These are stocks that get at least 50% of their revenue from offshore markets. The fund thus has well over 50% of our total holdings exposed to global markets. Our top 10 holdings are made up of a number of the large rand hedge stocks such as Naspers, Sasol, British American Tobacco, BHP and Richemont. Looking at the funds from a domestic asset class positioning across the various asset classes, as mentioned previously, we have slightly been increasing our exposures to both the domestic property and domestic equity space, whilst still retaining our overweight holdings in cash, which we feel that an interest rate of around about 9% is competitive, and we can also reallocate that cash as opportunities in the market show themselves. On the offshore side, we are currently sitting approximately at neutral weight for our global equity and property holdings, and we are overweight cash, and consistent with our long-term views, we are underweight global bonds while the Fed is in an interest rate rising environment. Finally, the last slide sets out the fund manager exposures that we have. You will see that we have some of the leading fund managers both in South Africa as well as globally managing the various asset classes and fund allocations that we have invested into. It is also a mix of both active and passive fund management, which we feel both has a place in effective and efficient portfolio management. We hope that you have found this brief report both helpful and insightful. Thank you.